Understanding Bitcoin's price structure is the difference between, falling into hype, falling into FOMO, not positioning yourself correctly for the most probable move, and not seeing profit, instead seeing losses. So I'm going to break down the structures, and I'm going to break it down in a lot of detail because I really want to sort of summarize a lot that I've been saying the last few weeks on this Bitcoin trend and how this, it's super important not just to actually see your portfolio grow, but in my opinion, just avoid, losses. And especially for new traders, this is super important as well. But we know, and the psychology part of it first is that we know that there's a lot of articles coming out the last few weeks just creating a ton of hype. And if the price was purely focused on hype, we would see the price continue and finally reach this green area. But instead, even during this environment of hype and pure optimism, we are seeing trends starting to show bearish, moves down. We're starting to see, short-term little micro breakouts not really hold themselves and instead break lower. And this is why it's so important, why I'm stressing over the last few weeks the importance of being very cautious and focusing on position sizing. I do have a trade I closed out today, one that I was talking about yesterday. I'm going to show you guys what it looks like. It says 260 up, but really the profit is the difference between 10,000 and the sell price. So I took out 10,299 or $229.32. That is my true profit of $229. I sold that position and I'm being very, very cautious going forward, continuing my small accumulation and micro supports and using tight stop losses. So now, going forward, I did open a position. It's most likely going to close extended hours because I am being very, very cautious now with this 0.618 retracement down here. But I'm going to start off a little bit on the bigger picture structure and then focus on the smaller picture to give you guys a better understanding of, how we can approach this in the best way possible. And to get an understanding of this structure that we have right here, I'm going to use one in 2024 as an example that I also documented during this time here on the same channel. So we had 3 deep value waves, and then going forward, we had a break of a break of structure where we see a rally continue, breaking past these past previous resistances. After eventually breaking these resistances, we find a top. This top is going to be a little bit different now, but eventually what we end up seeing is a corrective move down in 3 waves. So we have a very simple first wave, second wave, third wave down before we have a proper correction. Within this time, the proper correction would of course be the bottom of the swing low to the swing high, trying to see if the price could come down and trade between the 0.618 and the 0.5 retracement, which we did. And I'm going to go over the, how that influences what we're seeing right now. So currently, the proper retracement for this move higher is the purple area between, it says 89.9K, but I'm going to say 85K because 85K allows the price to fill in some imbalance we've seen here a while back in April that have not been filled yet. And it also allows the price to move a little bit more to the extreme side, and allowing a lot of that tariff news to sort of, fade away when it comes to how we're factoring into the price of Bitcoin. So we're going to say 85K is the actual bottom of the purple area, and then 100K being the top, which is where it's at right now. So 85 and 100K, that's the purple gap. And the purple gap, it means deep value, strong potential of the price having an overall higher low potential to then push the price much, much higher into this green area. And of course, this is highly influenced with the last year of the Bitcoin cycle, which is the most volatile, but also the one where we see the most gains as well. So understanding that there is a lot of volatility and we can see large price swings. I mean, look at the last time we were in the last year of a bull cycle, we see 20 to 30% dips very, very, commonly. And even if the price comes all the way down to 85K, that's only just over 20% downside, which is very much in line with the characteristics we see. But this rally breaks previous resistances. We broke previous resistance. We made a new all-time high. A proper correction is very, very much possible. Of course, this can be invalidated by the price finally breaking into this green area, but we're going to take a closer look now and how I am personally taking advantage of these fluctuations, regardless of the overall view, in my opinion, actually being down here into this red, potentially into the purple. But I'm still taking long positions, and here's why. Well, there's two reasons actually. Anyone that's holding and accumulating now with the intentions of holding it all the way throughout this bull cycle for months, you're probably just gonna experience a lot of deep value Bitcoin to accumulate more, and then eventually, in my opinion, it will be a V-shaped recovery upward and to make a new high from there. But here's the smaller picture, right? Every move, and I started taking micro support opportunities with tight stop losses way back here. I've been making videos on it. I've been talking about it. As we continue to move up higher, finally we have structures where it's breaking micro supports, and now we're starting to see a downtrend move. Yesterday I explained how this can unfold, and I'm gonna give you guys more detail on that as well. But it can either be something as simple as a simple 3-wave move down into deep value before the price comes up much higher, or it can be something where we see price come down, overshooting B wave, come down into deep value, and then go much higher. So both of these scenarios lead into the same direction, but the idea is that we want to conserve capital while still taking positions now. But how do you take positions now to the long side while conserving capital and protecting your position, right? So you can maximize your profit and also maximize the amount of capital you'll have to not just accumulate into a strong support area down here, but also if the price comes down into deep value, which as of right now, I believe will happen until we break, unless the price starts trending and we're taking advantage of those small structures on the way up, and it finally hits the green, then I will be invalidating these two areas, and instead we're going to be focused on new structures within here. But until then, I am very much open for this, regardless of all the news coming out right now. Again, price structures do something different regardless of what the news media says, and this has to do with keeping the structure healthy and the price balancing itself out so it can continue the direction it wants to go. So here's the thing, right? When it comes to micro, right, we have or not micro, but in the smaller picture, right, we have this retracement area which factors in the last swing low, or at least not last swing low, but the first overall dip down that confirmed a higher structure to actually be forming, because this swing low, unlike the one up here, this swing low was still below these resistances. This one was above it, and it found support above these resistances. So this is very significant to me. So I'm using that down there and all the way up here to create this area. Now, with the current movement that we have in the price, which I need to update a little bit. So from the price up here coming down to here, we have a fib extension, bearish fib extension that allows us to take advantage of. I'm going to bring it up a little bit higher right here. It brings opportunity to overlap with this area, overlap with consolidation area, and find support roughly 103 and 104K. This can allow us to see a move down where we can have a lot of imbalances, potential areas to look at for a bullish retracement upwards before the price comes down lower. So this area provides an opportunity to trade to the long. It will look something like this, where we come down somewhere between 103, 104K roughly. We'll have a better idea when we're there. An opportunity for the price to come up before it comes down lower. Now the price can either find resistance at this yellow retracement line, that resistance line that we've been seeing for quite some time, and this could potentially overlap with any imbalances that'll be created as the price moves below the yellow. So an opportunity to buy, opportunity to sell as we move down lower. But that's not really what I'm trying to express in this video. What I'm trying to express is conserving capital while still taking long positions and protecting yourself, right? So it's as simple as this. We have the opportunity of overshooting B wave to still happen. Now, in the picture we have is that we've seen the price come down. We've been tracking this move down all the way down here with this retracement area in orange. Now, this retracement area has been holding quite well, where we had an opportunity to accumulate in the blue area, which is the retracement from down here, from down here. This is the actual low of this consolidation. From down here all the way up to up here, it shows potential for support in the blue area before it comes up into the retracement before it comes down lower. So that's going to be very, very simple, or very similar to if the price were to come down here. We'll do a very similar structure. We'll keep track of the price as it moves down into here. And then if it finds support down here, it's the same thing as this, where we follow the price down, we accumulate in the support area, and we sell in the retracement area before the price comes down lower. So it's just repeating itself. It's the same thing, but I'm going to go over this as it actually happens. Now, to take advantage of this, what I've been doing is very simple. Just like I did with the trade I closed out today that I opened yesterday, I noticed that the price was attempting to hold support in this area. And it did very well. It broke below the 0.5, but it couldn't really hold below it too much. But regardless, we had the price trading between the 0.618, 107.8K, and 0.5, which is 108.26K. But the thing is, it showed support. It showed us a short-term, opportunity to take advantage of a bullish retracement upward before the price comes down lower. And so far, we're still holding above the bottom retracement area here, which can act as a support, but the yellow area hold very well. We came up and we couldn't really hold above the 0.35 at 110.2K much. This area is still very much valid until the price breaks below this swing low down here, which is at 107.5K basically. The moment we break below this, we're not looking at this area anymore. It will be invalidated, and instead we're looking at high probabilities of the price fluctuating its way down into this area for us to take another similar opportunity like the one here, where it comes down into the retracement support area, comes up into the corrective move before it comes down lower. So it's the same thing here, where it comes down, we follow the price up to a retracement area from the new move down, selling opportunity, buying opportunity, then selling up here before it could potentially come down lower. But every time we reach these support areas, regardless of reaching the resistance area, we have opportunity to take advantage of short-term micro supports. So if you guys were, using tight stop losses, you would have had an opportunity where, you've seen the price come down, there's imbalance down here, and we have a retracement support area, micro support opportunity for the price to go up higher, and then you can start, in my opinion, shaving positions every time we hit a new line in a retracement area until it eventually maxes out. You're locking in profit, and now we're moving down lower. Now, in this case, I'm taking an opportunity right now. It's extended hours, and I took an opportunity on an exchange that I have, a brokerage, with a tight stop loss. In this case, it'll be, again, like I said earlier, it'll be down here on the swing low of 107.5K. To me, that's absolutely acceptable. For my position size and my risk management, for a lot of you, it might be lower. Maybe you don't want the price. You don't want to see the price go, as you're holding a position, to go below the 0.618 at 108.8K. So that's also a very conservative SL. If the price holds above this area and it continues to retest, resistances, we can see the price eventually come up here. This is absolutely possible because we're seeing a swing high right here that's higher than this one, and we're seeing a higher low from here. So we have opportunity for an uptrend to continue to happen and try to find resistance up in this area. So this area, of course, is factoring in the low of this structure to the top of the first swing high down to the higher low. It gives us, we have opportunity to come up here, retest this swing high, all-time high. We have the opportunity for that. But the reason I'm taking, again, I'm going to repeat this just one last time. The reason I'm taking small positions with a tight stop loss is because the overall view, what makes sense the most, at least to me, is that we will see more of a proper correction downward to then factor in this amazing rally that we've seen for quite some time before we can eventually see the price come up into this area. So the purpose of taking small positions is to, of course, capture any more potential smaller picture rallies, right? So we can profit off of that, continue to profit off of that. And then the purpose of the tight SLs is to get out quickly to conserve capital, so then we can have a better opportunity to accumulate much more at a more reasonable price. because again, overall the price is very much ready to have a proper retracement, and the moment we do, you want to make sure you have as much capital conserved as possible to then take advantage of it, instead of being, someone that takes aggressive positions at higher prices. Eventually, when we have a great deal to buy low, um, you're just holding on to a massive loss, and you're just hoping the price goes higher instead of just taking advantage of SLs to conserve capital to buy at a much better price. So make sure you're conserving capital, in my opinion, is super important, while at the same time setting yourself up to still capture small moves higher. So yeah, that's the whole purpose of it, guys. I'm gonna keep doing this. I'm gonna keep updating you guys on these because it's super important, in my opinion, to set yourself off for uh, short-term opportunities while still conserving capital for the real big deal that we can have soon enough in the future. Don't let hype, don't let news media, don't let anyone overhype you, because the moment you pay attention to the structures, you're gonna know. You're gonna know, and any indicators that you should be taking seriously. You're gonna know that you're gonna know what's more realistic to do. And so far, we're still flirting with 120 moving average. We haven't seen the RSI max out to the bottom side and extend it for quite some time, so we could see weakness form here. But as of right now, we're still holding a smaller picture, higher low, and a higher high structure. So we're still looking for this area. But again, if the price breaks below here, I'm looking to accumulate at more reasonable prices. That's why I'm going to conserve capital, but still set myself off to uh, get some profit if we do go up much higher. So yeah, guys, hopefully this video made sense, and I'll catch you guys on the next one.